Hello, Cleveland, and everyone from everywhere else. Welcome to your 10-minute TA for Sunday, May 18th, 2025. Weekly candle close coming at ya. Before we get started, though, please give me a like, give me a subscribe, and all of that good stuff. And as a thank you, I promise to respond to any and all comments that come in, except for the scam ones. Those will be reported. But yeah, any and all comments I will respond to. So, without any further ado, let's dive into this weekly chart. Rise up. Rise up. Up, 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 up. We will rise together. Okay, so what are we looking at on the weekly? Well. Came back up. Look at that. Our cup is forming a little handle there. You can see our handle forming here. And should this handle do take off from its current position, well, our measured move for our cup and handle becomes 131. Very good. Okay, so our bull flag still in play. I gotta adjust it a bit. Our upper trend line or upper resistance is now up yonder. Our short play, still from down here, would be up to about 120. And our long play, is a little low, is from here, would be about 150. Well, I moved it down because I was just looking around at some stuff before I started recording. What was I looking at? Well, I was looking at this double top that's forming here. Well, possibly forming. What would invalidate that double top? A higher high. What would a higher high be here? A new all-time high. So yeah, we need a new all-time high. Otherwise, this double top is probably going to play out. So where do double tops play out to? Well, they play out where they started from. Where did this one start? Well, you could either say that it started here down at around 68,000, or you could say that it started down here at around 54,000. Yeah, there's about $15,000 difference there, but those are our pullback potentials for this double top that we're seeing here on the weekly. Now, if that double top did play down, and we were to find a little bit of support here at 65, you know, where that shorter play down was, if we found that support there, well, our bull flag would still be intact. We'd still be looking at that bull flag being something like this, and our big measured move would be to here. If we're talking shorter bull flag, we have to do our fib a little different too, and then it would get invalidated right around 75, 76-ish. So like, yeah, let's hope it stays above 76 just to keep our smaller bull flag target in play. But if that goes down, that double bottom plays out, double top, I mean, plays out down to that shorter projection, that shorter target, well then, you know, we'd be right at our 786 at the bottom of this golden pocket fib retracement for this bull flag, and then our measured move for that would just be up to 140. So even if over the next 2 months we did see this kind of come down all the way to this golden pocket, all the way to 65 over the next 2 months, having a summer slump, well then, yeah, our next move up from there would be a possible move up to 139. But if we're down that low, well then we're more likely to, you know, come on, keep going at that point, especially with that double top having an extension that would play to, let's make it red. Make it red. But that extension would play down to $30,000. And yeah, that would be under the 200 on the weekly chart here. And that would be the depths of our bear run. Where would that actually happen? Well, probably somewhere more out this way towards the end of the year, which would be lined up with our usual bull bear kind of difference, top bottom difference. So our top was in January, bottom should be around January. You can see here our top was in November and our bottom was in November. Same deal here. In 2018, our top was in December and our bottom was in December. Same deal here. Our top was in December and our bottom was in, well, I think this was the bottom here, January. It was off by a little bit, but basically a year. So yeah, that all kind of plays out. What we're seeing here kind of sticks with that thought process. And if we see this downside come down, this double top play down to its first target or even its second target. If it was the second target, well then our extension down would be about to 18, but I don't think it's going to go that far. I just don't think that we're going to drop down to 18 again in our bear market, in the bear cycle. But yeah, I think around December, January right here, we could see about 30, 35 is what I'm saying. 35 if we do make it up to 105 or 150. If our top is here and we see a 70% dump like we did the other times last time, let's just say 80, that's 20. Don't think it'll get that low. 27 for 75. 70%, 30. But it's kind of been shrinking, the amount that we've gone down each time. 86, 84, 77. So perhaps this time we'll get 70. Maybe a little bit more than that. Let's say 72. Let's say 73. Where would that take us? 28, right around 30. So I think 30 will be our cycle bottom sometime around January if this was the top. And actually, if 150 is the top, what was I saying? It would be about 35. So close. It wouldn't really be too much of a difference. You know what I mean? We'll just stop at 74, 36. So there's where I'm thinking our cycle bottom will be. Should we not be experiencing a super cycle? I mean, some people think we are. I mean, we might. We could still come down, we could get our higher high and we could keep on going. Get up to that 150. And what happens after that? Maybe it just keeps on going. I mean, I don't know, but we do need a pullback because you can't just go up and to the right forever. Like, I mean, look at this daily chart. Ever since April 8th, we've been pretty much just going up and to the right. And we can't just do that forever. We need to come down. We need to put in another low, like a higher low than that April low. Hopefully sticking over that 200 on the daily here. Staying in the 90s, putting in the higher low, and then continuing up to, our next target on the bull flag here on the daily, 115. You saw the targets on the upward targets on the weekly chart. So where I think we could be going. And at the moment, we're more bullish than bearish just because we're over the 200 on pretty much all of these higher time frames. However, we are seeing a bearish div. So you got those higher highs there on price action, lower high here on RSI. That's a bearish div. So we're probably going to see that higher low that I've been talking about. Well, hopefully higher low. We're going to see some price action going down over the next week or so. How far down, I can't tell you, but hopefully we stay over that 200 at the very worst. I mean, hopefully 99.6 can catch us and we bounce off there, put in a higher low, very high. Perhaps 94 can catch us. Now, if 94 catches us, then we might be putting in a head and shoulders, but we'll talk about that at 94 if we get there. Under the 200, and we won't really go any lower than that, but 90 after that. So hopefully we bounce off 90 if we do get under 200 and bounce right back over it real quick. You can see our supports under there, though, where we're heading, our fib retracements. Those are our support structures. That's what could stop us. That's where we'll see bounces. That's where there is some, bullish orders. Okay, real quick before the music stops. It's going to be stopping right about now. But real quick before it starts or stops, we're busting out what appears to be to the upside of our squeeze here on the bull band on the 6-hour chart. If we do bust out to the upside, well, oh, look at that. We found resistance from our upper trend line for that bear flag there. And let me just put on one more song. Beep. Let me chat over it. It's a Sunday video. It's going to go a little bit long. So yeah, we can see that our bull flag is still in play. We can extend our fib retracement a little bit. There we go. Extend our fib retracement a little bit. Oh, that's a little loud. Yeah, we can extend our fib out a little bit more. I'm gonna actually even bring it up a little bit now since price action got up that high. And yeah, our bull flag will still be intact as long as we stay over 97.7. Right now, it looks like we're breaking up to the upside, except for that bearish div that we saw on the daily. You can also see it here on the 6-hour chart. And yeah, you know what I forgot to do on the weekly? I'm just going to go back and do this real quick because, yeah, I'm going to, and you can't stop me. But anyway, on the weekly, we opened at 104. We got to a high of 106.6. We got to a low of 100.7. We got to and we closed at 106.5. That was a good week. Decent week. I mean, we only really went up 2%, but decent week. Does that look like a, hold on. It's not a spin top. It's a hammer candle, golden hammer or a green hammer candle. That actually says we might still go up a little more, the candle pattern there. But the bearish div on the daily says we might have a bearish week. Now, as long as we can't get a higher low, though, from those April lows, we're still in good positioning to, keep moving to the upside. Anyway, but if we get down past that April lows, man, then we're screwed. We're screwed. I mean, there's still a chance at that point for those higher highs, but not a good one. Okay, where was I? Was I in the 6-hour? No, wait. That was the weekly. Let me just go back here. There's the 6-hour. Alrighty. Bull flag still intact. Target's 113. Looks like we're breaking up to the upside, but our Stokes are overbought. Our RSI is still over its signal line and in bullish territory, though. So if it can be pushed, the Stokes can get stuck up there in overbought territory, then this can just continue pushing up. But if the RSI breaks down and the Stokes start breaking down further, like they're under their signal line already, but if they can break down further, or if they do break down further, well, then we're going to see a retracement. We're going to see some movement down. Hopefully we can stop here at the lower bound of our bull flag, 382, right around 102K. And but yeah, we've looked over where we can go below that. 99.6 is a support under there, even 100 here on the fib retracement. And as long as we stay in this golden pocket, don't dip any lower than it, any lower than 99.7, 97.7, then our flag's intact. Wait a second. You gotta lower that a little more. There you go, fib. That's a better fib. 96.6 even. All right, back off of this. Let's see where things are going over the next day or so. Whoa. No. Give me back the 6. There you go. And then now to the 90. Let's see where things are going for the next day or so. All right. Well, look at that. We bounced off that support. Bounced off that support, came up right to the measured move of the double bottom here. Played out to the top of the double bottom. Now we got the extension of the double bottom to play up to, which is at about 108.8. We got the that's a little low. Should be up here. We got the bull flag target up here at around 109 as well. We got the upper bound of our bull flag heading up that way. There's actually another upper bound that we broke up over. See, look at this. No, just make you green here instead. There you go. Broke over that one. These are all acting as supports now. Look at that. It came right down to it, tested it as support, popped right up. Tried to get up to, that all-time high levels, but kind of got stopped out and pushed down back into that 105 range. Okie dokie. So where are things going? Well, Stokes are looking to the downside. RSI is still in bullish territory. Actually put in a higher low. There's confluence between the higher low on the price action there. But look at this. We got a bearish div here as well. Another bearish div there on the RSI versus higher high on the price action with the Stokes pointing down. I think we're seeing some downside over the next couple days. And depending on how far down we go, that'll tell us, what's happening on these bigger time frames. Let's take just a quick peek at the 22. 22 Stokes are already down at their at the bottom of their oscillation. Looks like they're starting to curl a little bit, just a little bit. And the RSI is finding support at the 50. This wants to turn around and keep going, on the 22 at least. The 5, finding support from its 200. Pushing up on the Stokes. RSI, though, it's in bearish territory, but it did get over its signal line. So let's see if we can bust back over that 21 and that 50 moving average, move back up towards the upside of these this Bollinger Band. But the Bollinger Band's starting to squeeze too, so we'll watch. We'll see what happens. It's just the 5. It's noisy, but the 1 minute, it's moved under its 200. So perhaps over the next 10 or so minutes, we'll be watching for it to come back up over its 200. If it can't, excuse me, if it finds resistance there, consider that a move back to the downside. Stokes are overbought. If that moves to the downside, that'll drag the 5 minute to the downside instead of the upside. And then that'll drag the 22 further down. It'll keep the Stokes down here at the bottom, drag them into overbought or oversold territory, but it'll also drag the RSI down and price down. Hopefully staying over, 104, 103, 102. But, if not, we went over what the downside targets are. And our first one is the 90-minute 200 MA, which is at 1025. Hopefully it stays there. If not, our golden pocket, 107, 100.7K. Hopefully that can hold. Maintain our bull flag. If not, bull flag's invalidated. We're moving down to 99.6, looking for a higher low. And then a bounce up, possibly. But if not, we're going to 94 like we talked about. And if not, we're heading back to 90. Yeah, especially at 94, because then we'd be seeing that possible head and shoulders at that point. All right. I'm done rambling. You see the upside targets. I told you what the upside targets are. I told you what the downside targets are. We're seeing these bearish divs, but we still got bullish patterns. Bearish divs and bullish patterns. Who will win? No one knows. All right. Thank you so much for watching. Music courteously provided by Luminous Veloa and Sax Squatch. Much love. See you tomorrow.